What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we see a sizable sell-off prior to the CPI data tomorrow, and we are starting to break down out of the trading range. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so first we will address the obvious, and that is that there is going to be a large move overnight that will likely send SPY way higher or way lower before the market even opens tomorrow. And remember, that's the game you signed up for when you decided to be an investor and a trader. So if you don't like all of this volatility breaking out of this trading range, you're much better off just waiting until there's clear direction in this market. So the first thing you need to pay attention to is that SPY did lose two critical support levels today, so you're automatically getting risk off if you're following price action, because we broke down through the trading range below SPY 408 and closed below our 20 simple moving average, which was at SPY 404. The next critical support is down here at 394, which is our support trend line, and that could easily be blasted right through before the market even opens tomorrow. So that is always something you need to be paying attention to when you're getting these important data points coming out and you're getting a volatile market. So the number one price action you still need to be watching for in the bull scenario is that we get some type of higher low, which is more than likely going to have SPY holding up somewhere above 400 or about 393 to about 390, which should then cultivate some price action that sends us back to a higher high, with the price target more than likely up there at SPY 430. If we get this price action of higher highs and higher lows, that should put an end to the bear trend, and that should send a lot of bears in this market into hibernation. But we cannot assume this is going to happen. We need to actually see it happen. So in the other event, in the bearish scenario, we are going to make a brand new low, or at least retest the previous low, and we could be well underway in that move right now. And that retest or next leg lower is already well underway with today's price action, because we did get a very bearish candle closing at the low of the day and slicing through two critical support levels like they weren't even there. Now that could change very quickly, so CPI data tomorrow morning could still reverse this bearish candle, so we will want one more day of follow through, closing below 404 on SPY to verify that we are going lower. But by then we could already be much lower, so you want to use this risk level down here at 394 to about 393. And if we are going into the bear market scenario, we are going to break down below the previous low at 381 and very likely make that next leg lower at either 376 or 370. And yes, we could go lower than that in an extreme bear market scenario. So you really need to just watch price action and know these critical levels. And if you start seeing price action breaking down below SPY 394, you instantly need to start expecting this next leg lower all the way down here around 370. Do not forget that there is the possibility that this is going to be a higher low, and then we will still get a bullish breakout at a later date. So don't completely write off the possibility that the market could be trying to put in a higher low before going any higher, even though it's less likely now that we did break out of the trading range to the downside and lose two very critical support levels. Remember, I tell you the market loves to fool and hurt the majority, and right now coming out of this trading range with this very large move right before a major data release, that is definitely causing a lot of people confusion and uncertainty on what to expect. And that's why it's always better to have a trade plan that uses proper risk management and follows price action. So you should not be risking too much right now going into such an important event. And then afterwards, you can always see what the price action is and scale in accordingly. So just to recap on SPY, the bears are getting stronger now that SPY is below the 20 simple moving average. And the final line of defense for the bulls will be down here right around 394. And below 394, we are likely retesting the low at 381 or making that next leg lower. And you're not getting bullish until you see that this becomes a higher low and we start to break out back above SPY 408. And then we could start to say the bulls are still out there buying the dip, and we could be heading up to SPY 430. On the NASDAQ 100 triple Qs, we were down 2.68%, and just like SPY, the triple Qs printed a very bearish candle and broke down through the two critical support levels at triple Qs levels of 306 and 300. We did fill the gap on the triple Qs at 300, so as to be expected, but we don't know for sure the price action is going to reverse from here because we closed at the low of the day and we don't yet see tomorrow's price action. So tomorrow you're looking for follow through for the bears on a second day in a row closing below 300, and it could be a very volatile day tomorrow, so we could be heading much lower. So you will want to watch the next critical support at 293 and the previous low at 285. And if we start breaking down below 293, it is very likely that we're going to 285 or the next leg lower at 276.8 or 269.5. The higher low situation should have price action holding up above about 299 to 293. So if we lose those support levels, you will want to get a lot more risk off and a lot more bearish. Now, if we see price action bouncing off any of these levels at 300 or 293 and breaking back above 306, that will be the bullish price action. But wait for the confirmation. Don't just assume it's going to happen, because as I continue to tell you, this is still a very strong downtrend and a very strong bear market, especially in the triple Qs. In the event the bulls do cultivate a higher low and get the bullish breakout, you're still looking for strong resistance at 318 and 330. In the Dow Jones, we were down 1.94%, and again we lost two critical support levels, breaking down below 326 and breaking down below 324, but the Dow Jones did not close the gap at 322. So it's still possible we have a little more downside to fully close that gap. The higher low would be anywhere above 316, so get a lot more risk off if we lose support at the 320s, and then we lose support at 316. You're looking for either a retest of the low at 308 or a brand new low at 297. If we bounce from a higher low and break out back above 326, that will be bullish, but we'll still have strong resistance in the low 330s, and above 333 we have the bullish breakout for a retest of 340. On the Russell 2000 IWM ETF, we were down 2.33%, and again we have a bearish candle losing one of our support levels, but we are still above critical support at 183 and the 20 simple moving average right around 182. If we lose support at 182, look for a retest of the low at 175, and below 175 we're very likely making the next leg lower to fill the gap at 165.7. Your bullish breakouts are closes above 189, and then the bullish breakout is above 191.5. And if we get that bullish price action, we could start heading all the way back up to 205. On the ARKK ETF, we were down 6.07%, coming back down to the 20 simple moving average right around 43, and we have a clear rejection from resistance at 47. So I continue to remind you this is a strong bear market, and do not get bullish until we start closing above 52. From the rejection at 47, if we lose support around 43, look for a retest of the lows right around 40 to 39. And if we break down through that support, we're more than likely heading to the price target at 33.7. But do note that the Bollinger Bands are squeezing, so there's not going to be a lot of downside room for the price action in the near term. So we'll more than likely see sideways consolidation or slight downside. On the VIX, we were up 8.89%, and we did see the VIX spiking off of that support level at 24, so that is exactly what we were expecting to see in the volatile pullback scenario, and that is exactly what we got today. So we needed to see the VIX getting consecutive closes below 24 for the next bullish signal, and right now we're left guessing whether or not this is just a spike in the VIX during a pullback, or we're getting ready for another spike in the VIX for the next leg lower in a bear market. So be cautious while the VIX is elevated above 24, and the next confirmation of a bearish leg lower will be when the VIX breaks out back above 30, and we're getting a lot more bullish if the VIX starts breaking back down below 24. On Bitcoin, we're currently flat, still trading right around 30,000, sitting just above the 20 simple moving average. And remember, Bitcoin is very simply trading in a trading range right now, and you're not getting bullish until we break out above the trading range above 32,000, and you're not getting bearish until we break down below the trading range below 29,000. Everything in between 29,000 and 32,000 is just a volatile whipsaw, so try not to get whipsawed in between critical resistance and support, and be prepared to trade the breakout in either direction. If we break out below 29,000, you're more than likely coming back down the retest support at 25,000, and if we get the bullish breakout above 32,000, look for the retest of resistance at 37,000. On NVDA stock, we were down 3.22%, and NVIDIA is starting to come back down to this critical support at 179. But as long as we are above this critical support, it is still looking like we could make that next leg higher to 200 or 210, and we're getting a lot more bullish above 210. If we break down below 179, look for a retest of the low at 161. And if we break below 161, look for the price target at 150. On Tesla stock, we were down 0.89%, and intraday Tesla was looking bullish, temporarily spending some time above resistance at 762, but failed to close above that level and closed just on top of the 20 simple moving average. Tesla overall still has a lot of bearish structure, so it still could be trying to come back down to 620 or a brand new leg lower at 571. So look for that price action in the event we start breaking down below support at 700. You're getting a lot more bullish above 762 to 775 for a retest of 828 and 900. On Apple stock, we were down 3.6%, and Apple clearly had that rejection from resistance at 150 and is coming all the way back down to support right around 142. Below 142, look for a retest of the support zone at 137. And if we break below 137, it's very likely we're trying to get to that price target at 130. And that could be the bottom in Apple stock. So I would watch that level very closely in the event that we do get there. You're not getting bullish until we get the close above 150. And then we should get the retest of 156. And above 156, we're getting a lot more bullish for the gap close at 174. On the financial sector, we were down 2.5%, closing well below the 20 simple moving average after that rejection from the 50 EMA. So you're watching for a higher low and a bullish breakout back over the 50 EMA before you get bullish in the financials. The industrial sector was down 1.97%, coming back down to the 20 simple moving average, which is the very critical support. If we lose this support, look for the gap close below right around 91.7. The healthcare sector was down 2.26% with the price action back below all the moving averages after a very clear false breakout look above the 50 EMA. So be cautious of the next leg lower if we lose this support zone right around 125. The energy sector was down 2.21%, so not even the energy sector was safe today, closing back down below the previous 52-week high of resistance. So we need to see another bullish breakout above 90 before we start getting more bullish on the price target at 99.6, because even though we did have two closes above 90, it could still be a false breakout and we could still be coming all the way back down to close the gap right around 86. So jumping back over to the S&P 500, without a doubt, we are going to see a continuation of today's volatility with tomorrow's CPI data, and nobody knows for sure whether it's going to be an up move or a down move, so just be prepared for either scenario and follow the price action. You know the bears are in control now that we lost two critical support zones, so the bulls have one last line of defense at 394, so set your risk at that level if you're still holding long trades. And if you want to be bullish, you are waiting for confirmation of a reversal from this falling knife day. Let the price action make a higher low and get a bullish breakout, and then you can start taking on more risk to the long side, but do not try to catch a falling knife. That is a terrible idea in what could be a bear market trying to make the next leg lower. So use proper risk management and let the price action guide you on where we are going from here. There are still viable setups for a bull scenario and a bear scenario, so you cannot completely rule out either scenario at this point in time. Remember, the bears still have the advantage of the strong downtrend, so you have to give all the benefit of the doubt to the bears, which means the bulls are the ones that have something to prove because the bears clearly have the advantage of a strong downtrend. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.